The two MCs have made my work a little bit shorter, so I'll go straight into calling the eminent lady and gentlemen who will be helping us to unpack the discussion panel. So in no particular order, allow me to call Jinga Kapia. He is the country head compliance at EcoBank Zambia. As Jinga is coming through, allow me to introduce and welcome to the stage Sela Gikonyo. She's a group CEO of a Fintech based in Kenya. Following Sela, allow me to call Camilo Arango, all the way from Colombia. He is the head of expansion at Minka. Please, you're welcome. And lastly, allow me to call Ahmed Nafi. He is CEO of MGP, all the way from Egypt. So in the interest of time, we'll cut out their bio, but please go to the African Summit website, the app, and you can scroll down the bios, both for me and the panelists. We should have been joined by Arthur Mukembo, who is head of ventures at Baobab Network based in Uganda. Unfortunately, he couldn't join us this afternoon. So we would urge you to go to the website and just pick what he had to share. He's posted a video on our website. So with that said, in the interest of time, we'll go straight into the panel discussion. We will not go into the nitty-gritties of introduction because you are expected to scroll down their bios on the website and on the application. So to start the ball rolling, and in no particular order, I'll put Ahmed on the spot. And Ahmed, I just want you to help us to unpack the aspect of fintech startups, which are now becoming fully fledged banks. We are calling them neobanks, or providing most of the banking services across the continent. Please, can you just tell us what capabilities and advantage do fintech startups have in providing banking services compared to the traditional legacy banks? Over to you, Ahmed.
Thank you, Leonard. So I think fintechs sometimes have an unfair advantage to banks because what we see is that banks traditionally offer everything from private banking to consumer banking, SMEs, corporate. And when they compete with a fintech which is really focused on providing one service, at least initially, you can see then the difference in the product. You can see a difference in the time to market. So, and we saw this in a few cases. We saw this in a case in Egypt where there was a fintech that was focusing on providing salary advance and payroll. And what they could do was that they were able, through connecting with our platform, to provide companies, through their part-time workers, a solution where they're able to go and meet them in the middle of the desert. They have workers there, give them a card, give them a payroll, give the corporate a portal to actually daily pay them. And this payment was done 24/7. So banks can do that, but usually banks opt not to do that. So we think that based on specific products, fintechs are usually at an advantage just because of the focus on technology and the product.
Thank you. To you, Sarah. On the other hand, banks with infrastructure and stability are providing last-mile digital banking to the masses. We've seen banks moving to digital FinServe. Just tell us, how do you compare the initiatives from the banks to move into the FinServe space with the fintech startups?
Okay, so thank you. Hope you can hear me. So I think the traditional banks have made significant strides in terms of just digitization. If you look at years back when banks would purely operate from physical premises, evolved to ATMs, to mobile banking, and to online banking. So quite some significant traction has been made in terms of just digitizing the commercial banks. What I see more in the future is more collaboration between the fintechs and the commercial banks rather than competition, where you find fintechs being able to ride on the stability and the regulatory compliance to offer services such as insurance or saving products, which would ordinarily have been offered by traditional banks only, and also having commercial banks not necessarily invest in technology as such, but trade in the technology that the fintechs have already put in place.
Thank you. Jenga, you are coming from a Pan-African bank. Earlier on, we heard about a lot of progress in our market in terms of the digital space, a number of progressful milestones in terms of usage of the mobile banking channels. Now, I just want you to highlight what consumer tastes and trends have you noticed among the African banking service users, from bank choice to stickability, to add-on services and usage. And then now the growing trend of smartphone adoption by the young and educated African is impacting banking services choices.
So what we've observed, and I'll get this from the EcoBank experience, in terms of starting with the last part of the question, what the young generation are doing with their smartphones. So in Kenya, where we are piloting we've partnered with an entity called Fingo. They've come up with an app which is powered by EcoBank, which is meant for the youth. And that app is basically what they said they needed. They wanted something that was easy to use, that was dynamic, and basically user-friendly. So with that, you find that our hope is that with once they've accepted our product, then we can scale it up right across the country, right across the continent, where we are present in 35 countries. So in terms of the first part of your question, you see that banks have obviously, customers will always come to the bank and say, this is what we need. And as banks, we have to then adapt and present to them what they need. So we've had situations where we've rolled out a product and you find that the adoption is almost zero. So you have to take into account the customer. What does the customer need? Fix their problem, give them the solution in terms of what they need so that they can then utilize the service.
Thank you. Camilo, earlier on we did learn that predominantly Africa has got a young population. And by my check this morning, we are talking of 1.4 billion Africans, and 70% of them are under 30. You are coming from another continent. So I just want to get your view around the aspect of payment interoperability, how it has been. I know it has been a pain point in terms of migrating to mass digital adoption and consumer convenience. What should payment operators, banks, fintechs do to enable payment interoperability, and why is this important? And if you could also just give us a bit of highlight from the markets you are coming from.
Perfect. In Latin America, we encountered similar challenges to adopt these interoperable solutions and to start convincing different players around the ecosystem. And we actually had like two ways of managing and addressing these challenges. The first one is through collaboration between public and private entities to create a regulatory framework for us to implement interoperable solutions. So through a legislation drafted by the central bank, basically. This is the approach that many countries have adopted in LATAM. Biggest case is Brazil with PIX, but we also have Peru, Ecuador, Paraguay that are adopting this collaboration in order to just draft a legislation and make it interoperable, and create like an interoperable market for everyone. And the second one is, and happens in countries that interoperability is not in the agenda of maybe the central banks, something that happened, for example, in Colombia. In Colombia, we do it through a partnership with the private sector. So we enabled a real-time payment interoperable system, only partnering with private sector, convincing banks, microfinance institution by microfinance institution, We were talking about that a couple of minutes ago. It's an enormous work, but it's also a huge opportunity for the market to implement. And in terms of benefits, I'm also coming from LATAM, cash-based economies, it's enormous. Like in order to creating interoperable markets in cash-based economies opens the doors for a lot of business models through financial inclusion to digitalization of the whole economy.
Thank you. Sela, you are coming from Kenya. A market we hear is quite advanced with these digital payment options. And advise you provide smart financial services to a larger segment of the market in Kenya. So I just want you to explain, how do you deliver those banking services to the masses, and what technology are you using? If you're able to share the platforms that you use to ensure that you extend the reach to as many people as possible.
Okay. Thank you for the question. So Finclusion Group is actively building a neobank for the sub-Saharan market. So currently we have operations in South Africa, Kenya, Tanzania, Eswatini, and Namibia. So in terms of just how we reach the customers, so it's very different for different markets. And so while we are working towards creating a fully digital bank, we've come from a point where we appreciate that our customers are on different journeys in terms of the digital adoption. So for markets like South Africa, where the penetration is quite significant, we are able to offer services end-to-end on digital platforms. For markets in the East Africa particularly, we are using a hybrid system because you have a big chunk of the population that would want to speak to someone, see where your offices are, and get comfort that in case of any problems, then they know where to get you. So for that, we then have 26 locations in Kenya and 1 location in Tanzania. And then from a digital perspective, we have a range of services because, well, the market penetration in Africa is largely close to 100%. A big portion of this is feature phones, which means even if you create a very good app, a big chunk of the population is not able to access your services. So you have to start from low-range digital solutions, USSD, WhatsApp, web platforms, and then apps. So it's a wide range of services that we do offer, depending with where the customer is on the digital space, and then walk the journey with them towards making sure that they are more comfortable to operate in the digital space and can fully transition to the digital space. So I think one of the key things that was a bit encouraging to me when the minister was speaking in the morning is when he said Kenya and Zambia are looking towards setting up plants to manufacture smartphones, because that's really going to help in digital penetration and in extent financial inclusion in Africa.
Okay. Ahmed, you are into issuance of digital card services, but yet statistics show that only around 4% of the African market basically use the international cards, the MasterCards, the Visa cards. So we do have a low penetration point in our African continent. So I just want you to share with us, what is the logic behind your digital card services, and what is the uptake, the adoption across Africa, and is it in any way enabling financial inclusion?
Thanks, Leonard. That's a question that I'm constantly asked. As we manufacture cards and we deliver cards to around 40 countries in Africa, so that's a question we constantly ask. What's the future of the physical cards? And this number you said 4%, I'm assuming it's 4% of the total transactions, right? So probably cash is still like 70 or 80%. And wallets would be, let's say, 15%. It's interesting because what we've seen is that wallets, cards, in any form, it's just a tool to access your account. As a fintech, as a bank, I would want my customer to access the account as easily as possible and as quickly as possible. So naturally what happens is that we like to give them all options. There was recently an article by Edgar Dunn, which is one of the larger payment consultants, and they forecasted that currently 71% of all transactions in Africa are, in Middle East and Africa actually, are wallet-based, so it's whether it's a digital wallet or Apple Pay, Samsung Pay, and this includes the Middle East as well, and 29% are card-based. Their forecast is in 5 years later, cards will be 21% and 79% are Apple Pay, Samsung Pay, wallets, etc. So naturally you think that cards are declining, but at the same time, the whole digital payment space is growing at around 15 to 20% annual growth rate. So if you net that, you'll see that the cards are increasing year over year. And what I can tell you is, as part of our card side, and speaking to other of the larger card producers, we've been having the best 3-4 years and we see growth, and the growth is actually driven by the digital banks and the fintechs. Because at the end of the day, you would want to have, we are human beings. There's a reason why we're here. There's a reason we could have all come in remotely, but at the end of the day, we want to feel things, we want to meet people. And a card is still an important physical aspect that gets in place, especially if you're a digital bank or a fintech, where you still need a touch point with your client. So our perspective is, and based on the numbers we see, that it's not a wallet or a card. In fact, we see that both are growing. They're not cannibalizing. They're cannibalizing cash, and cash is the main enemy of digital payments, not cards, not wallets, not Apple Pay. So we're still fairly optimistic about physical cards, and we see this across growth across all of the markets we're in.
Thank you. Back to you, Camilo. I just want you to help us to unpack the concept of open banking. What do you understand open banking? And if you could please just share with us some of the success stories impacting real lives with real-time payments.
Perfect. First, I'm going to start explaining for me what's open banking. And for me, open banking is the foundation of the development of the whole fintech ecosystem. It's basically sharing information, financial information, to third parties, for those third parties to create new business models or new financial products. And in terms of success stories impacting life, the impact of interoperable real-time payment networks is huge, and it directly impacts on how we relate with money, basically. And I bring like a success case that we had, and a distinction that we had in March of this year. Minca, or our solution Transfilla in Colombia, that's an interoperable real-time payment network, was recognized by the United States Agency for International Development as the 2022 DG Award winner for develop a real-time payment network that has a direct impact on low-income groups to conduct real-time financial transactions. Before Transfilla, and I'm going just to give you a context of the impact that this had in Colombia, it's having also in Latin America, and we have seen it here also in Africa. Before Transfilla, an interbank transaction in Colombia could take kind of 3 days to arrive to the other part, to the receiver. And this meant that entrepreneurs who relied on daily cash flows had two options facing an interbank transaction on their business. The first option is to actually accept the transaction and wait those 3 days, but remember, they rely on daily cash flows, so they will need to go seek for a credit loan to survive those 3 days and then pay interest above those credit loans. Or the second option is to ask for cash payment and take the risk of losing the sale. So basically, with Minca and with all these interoperable real-time payment solutions, we are allowing money to move freely between accounts, between systems, and passing through a digitalized economy.
Thank you. Ginger, I come back to you. EcoBank is one of the, first of all, it's a Pan-African bank operating in many African countries, so at least you are privileged to give us a perspective of what's happening in Zambia and what's happening on the African continent. We do know that EcoBank is one of the most fintech-friendly banks, not just here in Zambia, but even across the continent. You always are developing fintech challenges, and you encourage open banking and sandbox test environment for new products. We just want to know how the bank is reaching out in terms of innovation to tap into the masses, especially the last mile transactions. I am aware that you've played a key role in the Zambian banking sector, even in the region on SADC, where you were participating in internal integration projects, regional payment systems, and you've got quite some vast experience in that line. So I just want you to tell us, how is that changing or helping banks to respond to the changing consumer needs, and how the digital transition among the banking industry is affecting the masses in terms of innovation and product offerings?
Thank you for that question. So maybe I'll just start with the first part. You touched on the Fintech challenge, just to give insight in terms of what that is. So EcoBank invites Fintechs that are African-based, whether the early startups or mature ones, to basically submit whatever solution that they have. Whatever solution, obviously, they are proposing to the bank has to be aligned with our strategic goals. It's evaluated, and if it goes through, for example, for 2023, it's already been closed. There's a winner, and that winner walked away with 50,000 kwacha. dollars, $50,000. And then, obviously, in terms of what it does, is that solution that they have will be scaled up and will be rolled out into the 35 countries that we have. They are privileged as a Fintech fellow. They are then able to use the Pan-African sandbox for them to basically to work on their product. They are able to access venture funding from our partners, and we also do introduce them to other partners that we work with in terms of solutions. So the Fintech challenge is an exciting thing. For those who are interested in taking part, be on the lookout. I'm sure next year to be held, so that you can then take your chance. You know, you always shoot your shot. You never know. You could. So in terms of the other part of your question, so for the bank per se, as I stated earlier, we do, part of what we do from the Fintech challenge is that there are solutions that they propose. We do then take into consideration and utilize within the bank to actually improve the service offering that is offered to our customers. I think in terms of what has happened in the market, in terms of changing the customer, what has happened within the changing needs of the customers. I think for Zambia, the coming in of the national switch has actually pushed all banks to evolve, because it's sorted out a couple of things, pain points for customers. I mean, for example, initially it started with, when the switch came in, it started with the MNOs being able to, we know how to move money between MNOs. Because previously, if you needed to send money, if you're on, say for example, you're on MTN, and you want to send money to either Airtel, Zamtel, you would have to withdraw, then deposit. But now, with the switch, you can do a transfer across network, which is a brilliant thing. Then it moved to the next stage where you could now move money bank to wallet, basically from your account to the wallet, and from the account to the wallet, and then the bank to the wallet. So again, that was a brilliant innovation. Then they moved again to where we are able to do instant transfers. So if you want to move money to another bank, instant. You don't have to wait for the next business day. Instantly money moves. I know that currently there's testing where the cash out option. The cash out option means that if you generate a token, you can then withdraw it on any other bank ATM or agent, which is a brilliant point. Those are the pain points that most customers had as banks had to evolve to be able to provide those services, because if you don't, then you're behind bank, because the customer will know that they can do all these things with others, they can't do it with you. those are the kind of things that we have to do. Make sure that we upgrade our systems to offer services to our customers.
My final question to all the panelists. We have had 1.4 billion people. 70% are below 30 years of age. I must say they are coming in numbers. So how is your expectation of digital banking in Africa and in Zambia in the next 5 years and beyond? I'll start with you, Jenga, and then we go up to the end. Thank you.
Well, my hope is that we do get to where we'll be a cashless society in the next 5 years.
Thank you. Sarah?
So the way I look at it is threefold. So one, we expect some advancement from a technology perspective, wider adoption of AI, machine learning, data analytics, etc., creating products that are very tailored to people. And as institutions monetize this, you then expect the risk to increase. So we expect the cyberspace to also evolve and for companies to create solutions to help deal with cybersecurity from the risk arising from that. And I think the third leg is regulation, because as this evolves, we then expect governments and regulatory bodies to then step in and try to control and put order in the industry. And so we expect a lot of collaborations between the various players and the regulators to make sure that everything is in order.
Thank you. Camilo?
My expectations, as we saw this morning, are very high, and it involves the creation of not only local but regional interoperable digital payments ecosystems where mobile money operators, banks, fintechs, microfinance institutions, and all financial players play in this ecosystem. And hopefully we will see growth metrics in terms of financial inclusion and digitalization in the economy soon in Africa.
So I'll just echo what my fellow panelists have said, which is due to COVID, we saw a surge in use of digital payments and a surge in interoperability between different networks to open up. And what we've seen over the past 2 years is that this growth has been much faster than the past 10 years. And I think that this will continue for the first 5 years. I think that more and more you'll see more banks doing what EcoBank is doing, is becoming more fintech friendly, to open up their banking license, providing banking as a service to fintechs, and this will, I think, accelerate the market even more. So I think it's a pretty exciting time to be part of the financial sector in Africa, and definitely it's driven by financial inclusion. If we take, again, Egypt as an example, we've issued for fintechs around 2 million cards just in 1 year, just as a start. And this is significant volume, by the way, and it's mainly driven by financial inclusion. It's mainly driven by people who did not have access to banks or wouldn't go to a bank branch, and now they can pick up a prepaid card or a wallet instantly. So I think financial inclusion is the driver, and yeah, we're excited to be part of this in the future.
Thank you. Well, we have come to the end of our panel. Unless there's a burning question, just one, I can allow the audience to ask just one question. I see no hand. With that said, join me in thanking Jinga, Sarah, Camilo, and Ahmed for sharing impacts on how banking of the future will impact us all. Thank you so much.